Hi, this is Uday Turaga from ADI Analytics. Clients have been asking us for our take on why the UAE is leaving OPEC, and I thought I'll share a few highlights of our thinking. First, Abu Dhabi has a lot of low-cost capacity. ADNOC wants 5 million barrels per day of production capacity by 2027, so in the next year. Its OPEC quota was around 3.8 million barrels per day, so that was leaving a lot of capacity idle. That idle capacity at $60 an oil is about $25 to $30 billion annually. If oil is $100, then that number goes to $40 to $50 billion. So for a producer with a lot of low-cost capacity, this did not make a lot of sense. Second, the UAE has secured a lot of long-term demand in Asia, which is where oil demand growth is now concentrated. The UAE has expanded long-term crude and LNG supply relationships, particularly with India and China. A greater share of ADNOC's production is now sold under long-term contracts rather than relying on spot markets. So with long-term offtakes, UAE can convert a lot of capacity into revenue with relatively little hassle. Third, if you believe that energy transition will continue to occur at some, even if a slower pace, the rational response, especially if you're a low-cost producer, is to produce more to harvest cash and fund other parts of your economy, whether it is investing in downstream, logistics, or other non-oil growth initiatives. These are some of the few drivers that we are discussing, but there are several other drivers, including oil production growth from US shale and other parts of the world, geopolitical reasons behind this decision, and so on, but we'll address a lot of them in our research note. Also in our research note will be critical questions on what does this mean for operators, oil field service companies, industrials who produce and sell energy equipment, and investors, a lot of whom are clients for ADI. For example, when will we see ADNOC move into production growth, and what will that mean for their capital spending plans? Will this materially, meaningfully drive oilfield service demand growth in the UAE, and when will that happen? How is midstream capacity in the UAE positioned to serve this capacity growth in terms of pipeline capacity, storage hubs, export routes, things like that? How does this growth in upstream output impact downstream, in particular chemicals and petrochemicals, where the UAE and ADNOC in particular have been making big investments and acquisitions? If the UAE increases production, will upstream investments slow down in other parts of the world? And finally, what happens to the price of oil? We at ADI believe that the price of oil is headed to $60 by the end of 2026. In some ways, new production growth that is likely to come on stream from the UAE's decision to leave OPEC kind of substantiates some of that thinking. But reach out to us at ADI Analytics if we can help with these questions. Thank you for watching.